Hi guys, it's Doc's Market Minute for Wednesday, January 20th. There's little doubt that we've reached a bear market status, even though we're not down 20% on the S&P nor the Dow, but it's sure acting like it right now. So this is some of the worst selling that we've seen in a long time. Really what we've done is we've matched the August sell-off and not only in distance, but also just the velocity, what's happening right now. And that's very unusual considering the fact that we just had that correction just a few months ago. So that's not a very good sign, and it's printing some massive head and shoulders patterns across the board. Let's take a quick look at the S&P Sector Etfs. So what I'm going to do here is go one at a time through the sector ETFs and see whether or not we have any strength or utter weakness. Here, this is the consumer discretionary XLY. And so far what we're seeing is that this one is working on retesting the August low, but not quite there yet. So this one has been relatively strong. The consumer's been relatively strong. You can see here, though, that the August low has been punched through. So on the XLB, which is the building materials, so this one is doing very poorly. Here's healthcare. Healthcare has been holding up there. It's not yet in a monthly downtrend, so we have not lost the trend on this. However, we are definitely sitting here with a lower high setting up. Well, the issue is that the August low was so deep that it's going to be a while before that gets retested. But a lower high increases the possibility that we're going to fall into a monthly downtrend as well too. So this one started from some XLV, or the healthcare has been very strong for quite some time. Here's utilities, and this one is just a horrible chart, and I mentioned this the last couple of weeks ago when we last looked at the S&P ETFs, that this is just an untradeable chart right now, nothing going on with it. Here is XLE, and as we know, energy just getting absolutely smashed and killed. I mean, just like a broken egg on a sidewalk right now due to oil just continuing to sell off beyond anyone's expectation or belief. We're definitely in exhaustion territory at this point, but as I say, technical analysis works about 95% of the time, and then there's going to be that 5% of the time that it's just going to do what it's going to do. Right? So XLE is just on the avoid list right now, getting killed. Here's the XLF. This is the financials. Again, that August move was so strong that it's going to take a while before we retest that bottom. So right now it's more of a sideways pattern with a defined lower high. So this is not necessarily that good either. And let's see, we have the next one here is XLI. This is now in a monthly downtrend. So this is the industrials. And this is similar to what we're seeing with the Dow, right? The industrial. So this is now a lower low monthly downtrend. So this is bear market price action, even if it's not down by 20% by itself. Okay, and finishing off the last couple, here's XLK. This is technology sector, and this one is weak, although it has not yet tested the August low since that was so deep. There was such a panic sell-off from the August move on here that it took care of a lot of dead wood, but right now there's still distribution going on. So even though this is coming from a higher high, so we haven't broken trend yet, we're obviously still weak. This is maybe the strongest one that we've looked at so far. And as we get down to the last one, this is consumer staples. Of course, this is a very defensive sector because everybody has to buy these, right? So everybody's sort of forced to buy consumer staples, so this ends up being a very defensive sector. So there you have it. Well, is anything doing well at all? Well, there's always the TLT, which is really the only light in the darkness right now. The TLT is broken out beyond this weekly trend here, so I would say on the TLT, well, all of this, we're going to look for a pullback on the TLT. Right now we have daily exhaustion, so this is probably going to pull back, fill that gap, pull back a little bit, and that might end up being a nice long trade for us as the TLT becomes a very defensive play as well too. But plenty of energy for this one to power quite a bit higher on the TLT. So there we have it. Back to the S&P here. You can see that the S&P is now put in a lower high, lower low. So we have a change in polarity in the monthly chart with a huge trend line break, extremely bearish price action, and there's just no end in sight as far as the selling right now. So with another 4 hours left to go in the day, actually this is what I'd rather see. I'd rather see weakness earlier in the day and then strength coming in at the end. But even any strength coming in at the end of the day has been faded the next day. So until we start to see that change, and as I've been talking about quite a bit lately, the 78-minute chart really is the key here. So every little pop higher that we've seen has been sold into, and these are just creating lower highs all the way around. Even though these are 30-point moves, this is where the ATR of this type of market is so huge right now, because every move that we have is moving higher, is just creating a lower high and is being sold into and faded. So until this changes, until we start to see that change in polarity with the 78-minute chart putting in a higher low and then a higher high, this eventually will start pulling up the daily chart. This has a lot of work to do before any kind of reversal is going to be seen in these smaller time frame charts. We almost have to go through that final capitulation where everybody panics and throws in the towel. We haven't seen that type of price action for a long time. This is in some degrees worse than August, because at least August was like ripping tape off of the hair on your arm that you got it over with quickly. It was over in 4 days. This is just death by 1,000 cuts, where every day it's just being faded lower and lower and lower. So we'll see where the pain point is, where people finally capitulate, throw this in, and that'll mark a tradable bottom for at least a small relief rally to the next lower high. We'll see what happens from there, but we have definitely entered the bear. Take care, folks. We'll talk to you tomorrow.